Donc, bienvenue à tous à ce panel sur le Embedded Insurance. Donc, je voulais commencer avec quelques mots en français. Puis, on a plusieurs panélistes qui parlent également français, donc sentez-vous à l'aise de parler en anglais en français. For this panel today, we're going to talk about winning strategy for embedded insurance. So I'm going to start by introducing our guests today. We're very fortunate. So we have Renée Walkom, CEO at Foxquilt. We have Hélène Falchier, partner at Portage. We have Mélisa Muraca, and I'm going to read this one because it's a pretty long one. Vice President, Technology and Transformation Strategy Global at SunLife. Welcome. And David Nault, co-founder and general partner at Luge Capital. And also, David had a great news this morning. They just announced their fund too, so congrats, David, on that.
Thanks, everyone.
So I would like to start with a quick roundtable. So could you all introduce yourself, starting with Renée, and give us a bit of your background and what embedded insurance mean to you?
Sure. So I'm Renée Walkom, the Chief Operating Officer of Foxquilt Insurance. So we are a North American insurtech focused on providing commercial insurance through embedded solutions. Prior to that, I worked a number of years at Munich Reinsurance in Canada, and then Germany, and then in the US. So I've been in the reinsurance, insurance, and insurtech space for a number of years. And embedded insurance for us is what we do, right? It's what we were founded on, it's what we have built, so it's core to our mission.
Hélène Falchier, I am partner at Portage. So Portage is a global fintech platform with two strategies, the venture fund, so early stage, and the growth strategy with the Portage Capital Solution. We are a truly global team, so with offices based in Canada, US, and Europe. I am based in Paris to cover Europe for Portage. I spent almost all my career in insurance and in classical insurance companies, so happy to cover also insurtech for Portage across the globe.
Good morning, everyone. I'm Mélisa Muraca, and I've been at SunLife for over 16 years now. Prior to that, having worked in the telecommunications and food industry as well as banking. My current role is overseeing today our U.S. IT strategy and delivery, just previously having overseen our global function as technology strategy and transformation. I do want to take a minute to thank you all for attending this morning, and to my co-panelists. Very much looking forward to talking about embedded insurance. And for us, embedded insurance is really about truly understanding the client journey and impact, and removing all those frictions. So really bringing the experience of purchasing insurance before and after any transaction where it makes sense. And how great would it be if you wake up and as you go through your day, everything you need is really available to you at the right time and the right place.
Hey, everybody. David, co-founder of Luge Capital, here with my partner Kareem. We have two funds under management. We're exclusively focused on fintech, early stage fintech. Our investors are a lot of financial institutions like SunLife, Industrial Alliance, Beneva, Deschatelets Bank. And so we look at the whole sector of insurance and broadly fintech. We actually get a whole report coming out in the next couple of days on the Canadian insurtech landscape and the future of insurance, prepared by my team member Laviva Mazhar, who some of you guys may know. And we love insurance, and I'm looking forward to talking about embedded insurance.
So thank you all to be here. I think we're very fortunate. So for today's panel, it will be divided in three main questions. So first question, what are the emerging opportunities in the field of embedded insurance, and how can both fintech companies, financial institutions capitalize on them to expand their market and drive revenue growth? So first question, David, going to kickstart this with you. As a VC, you are seeing a lot of insurtech. Can you give us an idea of the range of the spectrum of all the embedded opportunities on the market?
Sure. So I think, really by range, I guess we're referring to the degree at which embedded happens within a financial institution or a partner of an insurtech. And the concept of embedded insurance or embedded fintech at large has been around for a while. And what it really is that it's you're embedding yourself in the journey of the customer. So as you're buying a house, oh, maybe I need insurance. As you're choosing a baby's name, maybe I need, life insurance. And so, there's been this strategy used by insurtechs to go and embed themselves in that journey. So, for example, you might say, well, I'm gonna when somebody goes and buys a car, I'm gonna be on the website of buying a Tesla, or I'm gonna be I'm buying a franchise, buying a business. The franchisor is gonna introduce me to insurance. Now, there's different degrees of integration. You can have just your logo on a website, somebody clicks, fills out a form, and then I'm gonna call you back and sell you insurance. All the way to the fully integrated where you actually start transferring information to the partner to make life a lot easier in choosing that insurance. So, you think about you just bought car insurance. Well, they've got your name, they've got your address, they've got a whole bunch of information about you, where you live, and so on and so forth. And well, maybe then they can start offering you another kind of insurance for your home or for your life insurance. So being fully integrated all the way to from the beginning. And I just close off by saying I think we're still a little bit in the beginning innings of all of this, where it's more of a simplified process where you're filling out a form, you're clicking on a link, you're saying, hey, well, yeah, I just got a mortgage. I think I need to look at insurance or life insurance and so on. And then somebody else is going and finishing off the sales process. And I think we're getting towards the quote to bind. So the quote to bind is you're actually going through the whole process online and you're getting quoted, and it's fully integrated with the insurance carrier to come back and actually give you your policy. But I'd say we see the full spectrum of the range with a little bit more towards the beginning of all of this journey.
Yeah, in this beginning, we're seeing more P&C embedded solution. The other line of business need, there's a lot of catch up, but there's still a lot of low-hanging fruit, a lot of opportunities. And in order to tackle those opportunities, Renée, I know that you understand that we have like 3 main pillars that we need in order to tackle embedded insurance. Can you give us an idea of what are they and describe it?
Sure. There are a few key pillars in order to be successful in the embedded space. I would say the first would be around product fit. So not all insurance products are designed to be digitally distributed, and not all insurance products can be retrofitted to an embedded insurance model. And so ideally what you're looking for is an insurance product, as David mentioned, that can go quote to bind online, so that you can have an automated underwriting or an automated pricing backend, so that you can embed in a journey, and ultimately the consumer doesn't have to touch a human if they don't want to. And not all insurance products can do that at this point. Obviously, as they become more complex, that becomes more difficult. There's also product fit in terms of the embedded partnerships. So are the requirements of that partner, so we work in commercial insurance, so e-commerce would be an example. The requirements of that e-commerce partner, is that a one-for-one fit with the insurance product? That has to be an exact match in order to be able to do this automated underwriting. The second pillar is an obvious one, I would say, but it's technology, but it's multifaceted. So you need the technology on the back end to ideally be able to do automated underwriting. And that becomes, as I mentioned, very complex as your products become more complex and as you want to build out a full insurance solution. But you also need the technology externally. So as David mentioned, there's a wide spectrum of embedded options, what it means to embed. It can be as simple as a link all the way through to fully bindable APIs. So as the insurtech, we need to have the technology available to meet the partner where they are at in order to embed in theirs, in their journey. And the last is often forgotten, and that's the human element behind all of this. I find that when we talk about the future of insurance or a digitally enabled journey or embedded, we forget about the people a little bit. So of course, we want to be able to have a journey where someone could bind insurance without having to touch a human. But a lot of times they do, especially in Canada more than the US a little bit around digital adoption. People still want that conversation or that touch point to kind of confirm that they're making the right choices, that they're fully covered in terms of insurance. And what's interesting and often forgotten, I think, about the embedded model is that how we, as Foxquilt, for example, treat the customer reflects not only on our brand, but it reflects on the partnerships brand as well. It's a very symbiotic relationship. And it's something, a relationship that requires, therefore, a lot of trust. And you're building a brand together a lot of times. So, yeah.
Yeah, very interesting. I like the fact that you talked about having a great product, because without the product market fit, you won't be able to tackle this market the right way. So in order to have a great product market fit, we need to have a great positioning in the value chain. So Hélène, I know that you have a lot to say about that. Can you give us an idea how we can make sure that we are optimizing to get that great positioning in the value chain?
Yeah, as Renée mentioned, so product market fit, the tech, and also the right distribution channel are pretty important. This is the embedded piece. But we talk about insurance, and the value chain of insurance is still pretty complex. So you need to have, do you need to have a broker, a carrier, a reinsurer, maybe a claims manager? So how you can manage all the different parties across the value chain. So you have to be really clear in terms of role and responsibilities across the value chain to keep the fluidity of the process of being an embedded insurance solution. So, and it's not easy, because if you have multiple partners, there is also how you share the value across the value chain. So, and you need to be value-added partners. If you provide only the API piece, can you capture enough value also? So this is the issue in terms of unit economic. You need to be value-add to keep enough of the unit economics across the value chain. So, and it's pretty complex when you talk about unit economics on the embedded insurance piece. But this is also pretty interesting to see that more and more insurtech, embedded insurtech partner platform, now they keep all the relationship with the end customers, even in terms of managing the claims, to just capture enough of the value, or to really design or redesign the product to be fully embedded in the distribution channel. So there is a lot of challenges, but this is why this is so interesting and so important to be embedded right now.
Yeah, thank you, Hélène. For sure, the value chain of insurance is very, very complex. You cannot figure that out without great strategic partnership with financial institution. More often than not, a fintech will need to partner with a financial institution in order to generate value added in that value chain. And we are fortunate, we have Mélisa here on stage. So can you explain what embedded insurance mean for financial institution, and what are the opportunity that you are seeing as a financial institution?
So at SunLife, we're looking beyond just insurance. We're also looking at health. And often you think of insurance, you think if something bad happens, I need insurance to cover me. But how about the whole prevention side of the coin? So it's really about looking at the entire client journey and working through what does it mean before you ever even get sick, or before you actually need the product. What's our role in helping our clients go through the prevention? And often prevention doesn't give an immediate level of satisfaction. For every action, there's a reaction. So when you talk to folks about prevention, it doesn't hit them right away. They don't understand the cause and effect necessarily. So what is our role in helping them through that journey in terms of prevention? And it's embedding insurance as part of the prevention side of the equation, such that should they have to go through an event of needing insurance, or if they are planning a large vacation, or if they're planning, to your point, they're pregnant and about to give birth, what's our moment in time to get in front of it? And sometimes you don't think about it until you see it. So what's our role in really being there at the right place, at the right time, through the right experience? But then more importantly, okay, great, how are we going to serve them? It's not just a question of presenting yourself, and next thing you know, you got to pick up the phone, and that's likely not the journey they want. So it's really working with our fintechs and our partners to see how we can, recognizing, it's kind of like when you're renovating a kitchen. We all know renovating a kitchen is far more complex and building a new one, because you open it up and you discover complexities in the infrastructure. So what's our role to leverage the value our fintechs have to offer in terms of the capabilities and the processes, recognizing we're also complex organizations. So how do we marry the data we have, the experiences we have, recognizing we understand our clients with the new technologies and really modularizing that, or really separating our complexities out from the ecosystem and seeing now with our partners and say, okay, let's understand our client from prevention all the way down to actually making the claim. What does that look like? How do we leverage those capabilities? How do we remove the complexities in how our distribution, our advisors, our providers, the whole series of events. And it's almost like the stars need to align to a certain extent. So it's removing one complexity at a time while we understand our client journey. So that was a mouthful, just to share the complexities, but it's really about not seeing embedded insurance just from the moment to purchase the actual insurance product, but way before that, and then even after that. Great, they purchased it, but now what? How thorough will the experience be around making the claim? And what does that look like? And then what happens after the claim? What about talking about further insurance from, again, back to the prevention? So it's really a circular experience.
Yeah, I like the fact that you mentioned starting with prevention, because I think if there's one gold nugget in that conversation, it could be this one. Okay. If you want to make a deal with a financial institution, start small. Start with something that's going to help them de-risk themselves. Prevention is a great way to do it.
Felix, another thing that you mentioned, sorry, I'm gonna add on just what you said, because I think it's super interesting for insurtechs, is removing complexity is kind of the competitive advantage that fintechs try to have, right? You look at large financial institutions and say, okay, it's too complicated to open up a bank account, or it's too complicated to buy insurance. And when I look at Foxquilt, something that you guys have done really, really well, and I find that this is something to reference, is how do you remove that complexity? By asking the questions which are really only relevant maybe to that customer, right? And when you think about, like, you're buying a franchise, right? You're buying an ice cream shop. If the insurance provider understands that whole franchise of 1,000 different ice cream shops, they can kind of underwrite them a lot easier by understanding one of them and then eliminating a lot of the questions that they ask a whole bunch of them, because they've already understood the risk associated with it, and simplifying the life of that customer. Just like if you're buying, you're a consultant and you're buying insurance, why are they asking me the question, do you carry inventory? Like, I'm a consultant. Why are you asking me that question? And like, if you eliminate those questions, you make the journey of the customer so much better, and they're more likely to go across the finish line and actually buy insurance from you. And so I like that, removing complexity for any insurtech through the embedded process.
That's come to knowing your customer, the famous KYC. It's not just a compliance step. It's a necessity in terms of understanding your customer. If you know your customer, you can build a great product for them. Second subject, how can fintech company best partner with financial institution to bring innovative embedded insurance product to the market? So Renee, I'm starting with you for this one. I know that you understand the importance on finding someone who live in both worlds. Someone who touched the startup, the fintech, and the financial institution. Can you tell us why and how can we find those rare individuals?
Yeah, I think I have a unique perspective on this one, because I have worked for the large carrier side. I've worked for the innovation unit within a carrier, focused specifically on insurtechs, and I've also worked for the insurtechs. So I do have a unique lens on the opportunities and challenges, I would say. From the large institution side, one of the biggest things we're looking for is innate understanding of what it means to be a startup, and what is important to startups. So a perfect example is speed to market, right? Startups are typically VC-backed, cash is king, there's a limited cash flow. So the speed to get to market is imperative. And so how can the carrier understand that to try and make this journey more seamless or speedy? Another would be an understanding of technology, right? So, and a true understanding of forward-thinking technology. There isn't the world where we're at right now, where a startup's technology, an insurtech or a fintech, is going to be able to fit one for one with a large carrier, right? There's legacy systems there. And so unfortunately, it's not enough from the insurance capacity side to just appreciate innovation or want to invest in innovation. Really having individuals who understand what that means in real time in startup world makes a huge difference. And then on the reverse side, from the insurtech or the fintech, having a really deep understanding of the industry you're in. I would say the first round of insurtechs were generally built by technologists, right? It was technology first and then industry second. And that's very, very difficult to have the right marriage, so to speak, between the startup and the capacity provider. So I think one thing that's really helped our relationships, using Foxquilt as the example, is that the majority of, not just our leadership team, but the majority of our company are either underwriters or come from an insurance background. So there is a very deep understanding of not just our product, but the insurance industry, the regulatory components, the compliance components. And so having people on our side that understand that world and their side that understand our world really is what makes a beautiful partnership there, and it is difficult to come by.
Yeah, absolutely. This is so important. But let's see what Mélisa has to say about that. In order to facilitate our partnership with a fintech, Mélisa, can you give us the key elements that a financial institution need to do in order to make this partnership a successful one?
I think step one is share each other's expectations. What are both parties good at and what are they not good at? So what are their strengths and how does that become complementary? Also recognizing, and going back to my kitchen analogy, startups, fintechs are fairly young. So delivering quickly feels like second nature to them. In a large organization that's 150 years old, what worked in the past, many feel will still work, and that's clearly not the case. The world is changing. So really, as we look to pivot, we bring to the table industry knowledge, skills and expertise, but then how to really pivot from a delivery standpoint to get products to market quickly. We also recognize we have to decouple a lot of what we do behind, the operations and anything related to our fintechs. How do we decouple or create a leaner, I'd call a sister company to a certain extent, a leaner organization to be able to bring and partner with the fintechs to execute on the strategy, the plan, the test and learn. And through that is recognize what each other's strengths are and then monopolize on that. So it's really having that clear understanding. We are very sensitive to the fact that budgets are limited and therefore really want to not use up all the resources of the fintechs because, we have a complex world that we coexist in, but really appreciate the value they bring to us, see that for what it is and really accelerate and see how we can get something out the door sooner rather than later and see that really as a journey versus just a destination. So I'd say, rule number one is be clear on expectations and strengths and weaknesses for sure. And
it's something that has changed a lot within the last 10 years. Financial institutions love to collaborate with fintech now. They don't choke on fintech now. It was not always like that 10 years ago. I tried some few ideas of fintech early on. It was way more difficult than today. I know, Hélène, that you've been in the fintech industry for many years. Can you give us an idea on what are the differences between making a strategic partnership 10 years ago versus today?
When we talk about underwriting the risk, pricing, so there is no possibility to get an MGA for an insurtech before, but that's exactly what Renée mentioned about the fact that now there is more and more underwriter on the startup side, so they really understand what is needed on the carrier side. So there is a clear bridge and communication between the insurtech space and the carrier. So it's pretty interesting that in 10 years, the change is amazing. Now there is more and more confidence and trust between insurtech and between carriers. And the insurtech also now understands that what they need what they need to prove to have the confidence and the trust of the carrier and to build the right product. So when this is a simple product, something available on the shelf, it's not really difficult. You can pretty easily find a career and having a pretty fast go-to-market. But when you talk about complex product and when you try to redesign the product, so the devil is really in the details of rebuilding the product. So you have to be careful about finding the right balance between the right product for the distribution partners and the simplified product, I think, to really find the right career and to keep the fluidity of the process of embedded things. So, but I think interesting, I'll see to see the future of the career, because there is more and more cloud-based core insurance system now. So in terms of tech solution available into the career space and really at the core of the career, I think we will see more and more innovation and evolution in the future as well.
You need to be careful when you open that hood. If it's too complex, you might get lost, for sure. We'll get there, but not today. David, as someone who knows the startup world pretty well, I know that you have a few things to say about starting small, starting with an MVP. Can you tell us why it is so important?
Start small, think global.
Yeah.
But the question about working with financial institutions, I've been around the block for a while as well. It first started out by saying, they'll never succeed, forget about them, they're all going to die. And then they're like, you know what? Those that are starting to succeed, we're just going to buy them. And then they realized, okay, wait a sec, they're a bit harder to buy and swallow into a large financial institution, and some of these are worth quite a bit of money. And then it became the third phase of it all is like, hey, why don't we partner with them and also invest in funds so that we can get closer to them? And I think we're in a really good spot, because I think that there's a win-win for the young, nimble companies bringing, new innovation on modern technology to financial institutions that have a huge reach, customer reach, brands, balance sheet. And I think that there's a great win-win to be happening between the partnerships. But if you're a young company, I think, this notion of grow at all costs, I think is past, especially in today's market. You can't be blowing a ton of money and not delivering sales, not delivering a product. So that has to be done. When you raise money, you have to deliver meaningful milestones. If not, there is no more money that's going to come along, right? So just understand how much it's going to take you to get to where you want to go, and once you get there, there should be other capital available to grow it, but build also a capital efficient business, right? Like this idea that it costs you $400 to get a customer and you make $200, and there's no line of sight to actually making back a model that makes sense. We turn our nose on those, and many other investors too. So just make sure you're thinking about a capital efficient business. There are businesses that are a lot harder to scale because the customer acquisition and lifetime value just takes way too long out there, and we've seen businesses that just dry up and can't raise capital because of that. So, and then the last thing too, and I got to talk at the end of the day with a company called Nuve and Philip Fayer, who went from startup to IPO. At, I think, 4 o'clock today, and one of the learnings about that one is just start small but think global. Like, you often got to build a really, really big business, it's got to happen outside of your immediate geography. So think about how your business can actually scale outside of your local area. But once again, you got to think small, run a capital efficient business, start small, and then but think bigger in order to build a sizable business in this space.
And what's beautiful about having a good MVP is that it's not costing you a lot of money to do it. So that's one of the advantages.
You're right. Like, what can you get out of the gate which will prove that you actually have a potentially viable business? And there are different phases of that, right? You don't need, when you think about embedded, we don't need necessarily a fully integrated, customer experience. I mean, you might go with something and just start and do this lean startup and say, okay, wait, this is good. Let's go the next phase. Let's go the next phase. So I agree, and I think Emma's gone through that as well, and now they've reached those follow-on phases.
Yeah.
I think if I can add to that, on the grow at all cost piece, it's extremely important, and there's kind of two facets to it. One is the unit cost economics, right? money out versus money in. The other side, when we're talking embedded insurance, is underwriting profitability. And that sometimes gets forgotten too, because that sits with the carrier side of things. And so this grow at all costs that we're going to write as much business as we can. We don't really care about the losses. We're going to have massive loss ratios and deal with that later. At one point in time, that was acceptable in the name of innovation, and that's not the name of the game anymore. So there's this lens on true underwriting profitability, and how does that impact your product design? How does that impact your target market? Yeah, I think it's an important piece now that is coming up, not just with the carriers, but with investors and the entire business model.
Yeah, once you start making deal with financial institution, there's a new word that's going to come along, which is profit sharing. So feel free to have those conversations with them. So third subject, how can the expertise and resources of financial institutions complement the agility and technology-driven approach of fintech companies in the realm of embedded insurance? So last big question, what do financial institutions bring to fintech? Hélène?
So first thing is the balance sheet, of course, because many insurtech are not heavy in terms of balance sheet, and raising capital today it's pretty tough. So in terms of the market environment, so having a balance sheet available, having a really good partners as a carriers, I think it's pretty important, and that's why you have to be really careful about underwriting and keeping unit economics working for your partners, your carriers also. So, and the carriers, they have also risk and compliance in place. And it's interesting also how insurtech can learn about the risk and compliance piece and capabilities part of the carrier team, because underwriting is not easy, and we have seen a lot of not the right risk management in the last couple of months. So having diversified bank account, having diversified. So this is everything about risk management of your business, and I think it's important to put that in place as soon as you can, as early stage as you can in terms of risk management. On the insurtech side, what they can bring is the innovation of the product. On the product side, product market fit, I think they can really help you redesign the product. So it's interesting, and also building new product for the new usage. So we see, for example, in terms of mobility, so you can have now insurance that address car sharings, and you also car insurance, but all the mobility you can use in one insurance piece. So this is something pretty interesting. And insurance is local business, so because it's fully regulated business, so you can have a license in one country, but it's not true across the world. So having an embedded partner that can be the touch point of the distribution partners. So because you need to distribute your product across the globe, and the embedded insurtech can deal with many carriers. And so you have only one negotiation point at the end as a distributor, but the embedded partners will bring you all the capability across the world in terms of the product or the insurance product you want to embed it in your distribution channel. So I think there is many things you can really build a great partnership and win-win partnership between a carrier and an insurtech.
Yeah, absolutely. David, anything else from a financial institution?
I think just that you get the financial institutions and the partner have a great brand, a ton of customer reach, and the startup is building on modern technology and reinventing status quo. So I think that there's a great kind of win-win that can happen between those two. And the financial institution can be a partner, a customer, can provide feedback, can be a co-investor, can be an acquirer, like SunLife acquired Dialogue, right? So there's really, it's where can it go, but it just starts with an initial relationship. And mind you, there are startups out here that probably, say, I'm not even going to partner with a financial institution. I'm going to go directly to the customer. And that's an okay model as well. But when partnering with a financial institution, I think that there are great opportunities to be had there. But you got to just really understand that imperfect world perfectly, because it is challenging to go from a very fast-moving startup with a very, very large financial institution that's 150 years old or so. But there are also great opportunities if you can both navigate and set expectations as well.
So Mélisa, do you echo what David and Hélène just said?
Looking at me, and we did the eye contact. I'm like, yes, I agree.
It's all part. Listen, one of our portfolio companies has a huge relationship with you guys. As a matter of fact, 2 or 3 of them. So, it is working. So.
I mean, yes. So the brand is clearly critical, but I do know at Sun we definitely feel privileged to want to do business with startups and fintechs. We see it as a huge learning opportunity for us. So the brand's great, but we all know brands die. So for us, it's very critical to get closer to the client and really rethink how we see products going to market, rethink even how we adjudicate claims, rethink everything. And I'd say in the last 10 years, SunLife has done a really 180 in recognizing the importance of really being there at the right place, the right time with the client. And acceleration does not mean building it on your own. Quite the contrary. It's really having active participation with all the fintechs and insurtechs and the startups to catapult our way forward. Sometimes it's the most simple things in life that really have a big impact on our clients. So it's really not losing that perspective. We think it's amazing. We've learned a lot too, as I'm sure they have appreciated. And often we get fintechs who come to us and say, "Oh, we could totally do this, in a month." And I'm behind my head, I'm laughing, saying, "Oh, buddy, you do not know what we have behind closed doors." So it's really having that conversation, and we've really learned a lot on both sides. And I think the startups also learn on their end and helps them then partner and know what to expect next time they partner with a large organization. So it's a win-win, actually a win-win-win, because the client wins too.
Yep.
I think two things too. Like, make sure you're going in with into the right relationship and the right person, like the right doorway inside of it, right? Some people think like, "Oh, I'm going to go out and see this exec," but actually, who is the person to be assessing you is super important.
Yeah, find the decision maker and all your champion within the organization. It's really important. And I wanted to keep a few minutes for Renée. I know that you have a great example with the Foxquilt. So what the financial institution bring to the table with the Foxquilt?
Sure. So I think one of my favorite examples is a Canadian one with Leaf Home. So we are embedded in the Leaf Home flow. And there's a few parties to this relationship. So to start off, we have the relationship with the carrier, the capacity provider. And obviously it's a contractual relationship, but it's also based on trust, right? So we had a product designed. It was a matter of making sure they were comfortable with how it was designed, the automated underwriting behind it, in order for us to get full delegated authority to do a quote-to-bind model. So it started there, and that allowed us, so that autonomy to be able to distribute this product and underwrite and bind this product allowed us to partner with, in this example, Leaf Home. So Leaf Home, if you don't know, they do gutters, like your roof gutter installation. And what they have is they have a network of contractors, tens of thousands of contractors that can onboard into their network and install these gutters. But what Leaf Home was finding is that when contractors went to onboard into their system, one part of that journey was to prove that they had contractors insurance with the exact specifications that Leaf Home required. And so there was a massive drop-off in that journey. When people didn't have insurance, they would have to leave and go get it, or leave and never come back, or leave and forget. And so that's where Foxquilt came in, and we were able to embed this contractor product into their journey in a fully automated underwriting way, which is very important in this one, because essentially a contractor can come in, they start the onboarding journey online. They get to step 5, I think it is, where they're trying to prove they have insurance. If they don't, they can click over automatically to our application. It's a dynamic application. It's only asking the required questions, as David mentioned, based on Leaf Home's requirements They can see their quote. They can choose to bind it online. The certificate of insurance is automatically provided to Leaf Home. They continue to the next step in minutes. So from Leaf Home's perspective, massive improvement to their retention in that journey. From our perspective, great unit cost economics. We know the exact risk we're getting. We know exactly what they do. And it's been a very successful partnership for us.
Yeah, a lot of value added. So we have a few minutes left. I think it's time for question. Do we have a question in the audience?
This could go around the panel, but specifically to SunLife, I mean, you see a lot of insurtech companies coming up your door, but you're also transforming the internal operations. So where do you see, from the internal perspective, the lowest hanging fruit for transformation from a partner in insurtech?
I think for us, in terms of low-hanging fruit, it's really, I don't know if it's low-hanging, but it's definitely working closer with our advisors, even in terms of understanding the client there. I'd say that's one avenue, and we recognize the advisor moving forward is not just an advisor for insurance, but is, as we're learning, becoming more of a psychologist in many ways, and a life coach. And so thinking through how do we change that conversation and support it. On the more tech side, for us, low-hanging fruit is how do we decouple our system, build APIs so we can easily plug and play with our startups, and bring those offerings more embedded, et cetera. So I think it's both angles. From a business standpoint, how do we build those relationships and recognize the important role the advisor has in building that relationship beyond just insurance? So there's the health side, there's the wealth side, there's the life coach support perspective, while in parallel from a tech standpoint, how do we modernize our capability, our technology, build the API so that as startups come to the table, we can easily connect our products, offerings, and services to the different platforms that present themselves if there's really a match. It's not really nothing's low-hanging in insurance, I think, but that's what we see as low-hanging. Hopefully that's helpful.
And if I can add something to that, if you want to find those low-hanging fruits, you need to speak to 2 departments or 2 champions. The first one will be in the innovation team. If you can have a talk with them, they will speak about their problem openly, especially lately after COVID. And the other part are the business line. You need to find that business line champion. They know their problem more than anybody. So if you can have those 2 conversations, those low-hanging fruit will come easily.
I couldn't agree more. That's what we have those conversations with our investors to kind of share openly what their priorities are, because really it's about priorities. And once you have those priorities and it matches up with an early stage company that can help them solve that problem, it's a green light for a next step.
I just want to add on to that. I'd agree in that, like example at SunLife, because we're global, we have offices in the US, in Canada, and 6 to 7 different countries in Asia. And when speaking with someone from tech, we have that global view. And then there's the business side, knowing their operations, but tech, bringing it really together and having those separate conversations, connecting the dot, I really think accelerated some of the work we've done together with Emma, with Dialogue, with Bowtie, with quite a few startups. So sure, just if you get no the first time, don't stop there.
Yeah. Absolutely.
Keep bugging Melissa forever.
Yeah.
Right.
As an entrepreneur, that's your role. So, so that's the panel for today. So thank you all. So I think it's time to lunch. So I'm not the only one who's hungry. So thank you.